And there, 105.7 FM. Good morning. It's 8:40 here, 20 before 9. And we're going to check in on your money and find out how Wall Street is doing today. We're not heading downtown to the office of Statler Financial Services this morning because Phillip's on the road, but we do have Phillip Statler from Statler Financial Services on the phone. Phillip, it's darn good to have you back. How you doing?
Hey, I'm doing great, Dave. After a couple of days of R&R, I'm in Dallas, Texas for the semi-annual meeting, educational event with Ed Slott. And for those who don't know who Ed Slott is the nationally recognized expert when it comes to IRA distribution planning, 401k distribution planning, and just following to make sure people aren't making mistakes. It's amazing when we come to these meetings, the mistakes that we see folks make, other advisors make, because they don't stay up and educated on all the rules and laws governing IRAs.
I know you've been singing Ed Slott's praises now for a number of years, and a couple of times a year you get a chance to get together and update yourself and make sure that your clients aren't among those mistakes you were referring to, right?
Absolutely. You know, it's a great thing to have a direct line to Ed Slott and his team there. Whenever we have questions or issues arise, we've got the expert right there.
Understood. Hey, we haven't talked to you since Friday, so I'll give you a chance to wax philosophic about the shredder day. I made some noise on Monday. Better part of 8,000 pounds worth of scrap paper, keeping people safe. It was a lot of fun on Friday, and I really appreciate you hosting us there.
It was a great day. You know, we had a lot of folks come out, got to see a lot of folks, and that's always a good thing. We got the final number was just a tad short of 8,000 pounds, but hey, it was that's 8,000 pounds of paper that's not going to get in the hands of people trying to steal your identity.
All right. A whole lot of people said, "Oh, I didn't realize I could bring that much." So I suspect next year will be a real welcome event sometime shortly after tax time next year at the same location down at your offices in downtown Sebring, right?
Absolutely. We don't have it on schedule yet, but I'm sure the next 30 days or so we'll be booking that out.
I'd bet a nickel that Vicky's already been on the phone with the shredder company by now, and you aren't even in town to find out when it is, right?
That could very well be.
I know her real well by now. Hey, setting the table for yesterday, after the Federal Reserve said that they were not going to raise interest rates, but weren't too excited about the prospect of lowering them either, Dow Jones Industrial Average ended up dropping. So did NASDAQ and the S&P. We were down over 0.5% on the Dow, down 162 points. NASDAQ fell by over 0.5%, down 45 plus, and the Standard & Poor's was down 0.75 of a point, down 22 points yesterday. And I was kind of confused by that because right now, hey, we got a level head. We're not going to do anything stupid. We're not going to change the interest rates. I would have thought that would have been enough to make the markets happy, but boy, they sure as heck weren't, were they?
No, they really weren't, Dave, you know, because right after that news came out, the markets did start to drop. And from what I've been able to tell today, it seems that there's some wording within the statement put out that people were hoping wasn't going to be there. They were hoping there was going to be some kind of language in there that would indicate that the Fed was very willing to reduce interest rates. And that just wasn't there. Matter of fact, Chairman Powell said that inflation is likely just in a transitory state right now and not in a persistent state, meaning that they feel like it's going to rotate back around to the number they want it to be within a short period of time. Now, what's a short period of time to them? You know, probably the rest of this year. And so there wasn't that wording in there saying, hey, we're sitting there ready to lower interest rates like some of the traders evidently were hoping for.
You know, I got to wonder, if you put yourself in the position of a Fed governor saying, I'm ready to lower interest rates, is also telegraphing to the market that a recession is imminent because we need to stimulate the economy in order to keep things going. I would not want to be somebody voting on that statement because no matter what you say, you're going to hack somebody off, right?
Well, that's true, you know, and so, and that definitely does not seem to be indicated in the numbers that we're seeing. Are we seeing a slowdown? Yeah, we're seeing a slowdown, but we're not seeing this drastic downturn in the marketplace.
Yeah, there's no doubt a recession is going to happen someday. That's probably the safest bet on the face of the earth. But right now, we're seeing, if anything, heading toward a soft landing, which is pretty close to a dream for the business cycle each time, isn't it?
Well, it is. I mean, I'm looking at jobless claims. I know yesterday ADP came out, and I didn't see really the details of that other than it was a huge win, a huge beat from an analyst expectation standpoint. But I look at the jobless claims today, and they don't quite say the same thing as ADP said yesterday. And granted, they're not looking probably at the same numbers, but weekly jobless claims came in at 230,000 versus 215,000 that was expected. So we are seeing a little bit of an uptick here in jobless claims, Dave.
That's understood. Yeah, to quantify, just to remind everybody, we got 275,000 private sector jobs, according to ADP, added in the last month. And 230,000 first-time jobless claims isn't what the market was looking for, and it's a little higher than we'd had, say, 2-3 weeks ago. But still, 230,000 is kind of getting still into the number of just the natural shifting and winnowing of job changes across the economy. So it doesn't really scare me much, and I think we can probably still look at it as being a data point, can't we?
Well, we can. I think, though, we have seen, if my memory serves me right, the last couple weeks, we've seen first-time jobless claims come in higher than what was expected.
Yeah, they're coming in higher than expected, although still a relatively low number, which is kind of like the Federal Reserve. I mean, we're not going gangbusters, but there really is an indication that things are going bad either, right?
No, you're right. Absolutely not. I mean, hey, let's face it. We're still at, record unemployment rates. But we could definitely, full employment by usually the definition that economists use is like 5%. So we're still way, way, way below that.
And that's kind of the moderation that I'm yelling about, saying, for heaven's sake, it's not exactly overheating, and that might be good news. And 230 doesn't scare me that much, even though it was a disappointment. Other numbers the federal government released this morning that I'm not sure I know what the indications are, but they're kind of interesting. Number of hours the average employee worked over the last month per week, up 0.5%. Industrial output in the first quarter up by over 4%. And the unit labor cost up the slowest amount since 2013, only up 0.1%. From the standpoint of shareholders, all of those numbers look pretty good, I'd assume.
Yeah, I think so. And then you add on top of that, the U.S. productivity rose 3.6% in the first quarter, and that was substantially higher than the 2.2% increase that was expected.
So we're ending up with, a relatively good set of numbers coming out this morning. And it's not really being reflected in the marketplace early on. We're kind of a mixed bag as far as the indexes. I'm betting it's probably because now we had a slight disappointment on first-time claims and a pleasant surprise on private employment. A whole lot of the fat money investors are saying, let's just wait and see what the number looks like tomorrow when we get the official unemployment rate.
Well, and that could be, after yesterday's kind of a downturn, and let's face it, we've been this week and last week at record highs. So it would not be unusual to see some kind of pullback here, given where we are in the market.
Yeah, you got to keep in mind too. Yeah, we've been mentioning this, that we're within spitting distance of the all-time records, and we've set a couple of all-time records on two of the indexes so far. So a rest break until we get some new stimulus, whether it's good, bad, or indifferent, wouldn't be irrational at all.
No, and you're right. A resting point would be good. Most people, I read a couple headlines I saw, expecting a 5% pullback at this point before the market can go higher. So a lot of indications that we could still see some more strength within this market.
Understood. So we're 45 minutes before the real money gets thrown around about 9:30 this morning. An off day yesterday after, call it disappointment on the Federal Reserve report and their rate decision. Which way we heading with 45 minutes to spare, Phillip?
So right now we got a tinge of green out there. The Dow's actually flat zero right now. The S&P 500's up $2. The Nasdaq's up 13. We've got gold and silver still heading down. Gold's down 1% this morning, down to $1,270 an ounce, and silver's down to $14.66 an ounce. So some downturns there, and crude oil, a substantial downturn, down 1.6% this morning to $62.55 a barrel.
I got to assume that's some backhanded optimism about the upset in Venezuela going the right way, because there really isn't any other reason I can think of for why crude oil would be going down.
Yeah, me either. And so I think Venezuela being in the news here lately is probably one of the reasons.
I expect so. Got mixed markets overseas, by the way. Asian rim markets mixed. The Nikkei's run an awful little bit this morning. The Chinese markets were up when they closed. Europe, about the same thing. Off a little in England, up a little bit in Germany without any defined direction either way. Phillip, somebody needs some advice in order to stabilize retirement and plan for that recession we were alluding to. How do I make an appointment with you on the phone?
Give us a call at 382-0037. They can follow us on our website at statlerfinancial.com. And then join us every weekend for the Statler Financial Radio Show, noon on Saturday, 10 a.m. on Sunday morning on News Talk 730 a.m.
And streaming, of course, at newstalk730am.com. Phillip, thank you so very much, and we'll catch you tomorrow morning about the same time. Fair enough?
Sounds good. We'll have a little update tomorrow.